But we'll talk about markets from a slightly medium to long-term perspective. Amit Gupta of ICICI Securities PMS is joining us now to understand how they are at their fund, the PMS, approaching investing. Amit, good afternoon. Thank you so much for your time. Nice chatting with you after a long time.
Yeah,
So
hi. Good
talk to us
afternoon.
about how the shape of your portfolio looking, not in terms of ingredients or names, but in terms of earnings outlook. What kind of earnings outlook is your portfolio? I see your portfolio, it has a good mix of large, mostly large, some mid. But on a blended basis, FY22, 23, what's the outlook on earnings?
Yeah. See, I think if you look at the 1-year EPS growth that we are looking from this portfolio is around 36%. And if you look at from the Nifty, what we have seen now, it is around 19%. So in terms of the earnings growth, yes, it is well placed. And it is, you rightly mentioned that we have a mix of large cap and mid cap, but more with a large cap bias. Because we believe there are still a lot of opportunities, in the large cap space. For example, you look at what has happened in the last 2 weeks, 2 or 3 weeks. The mid cap stocks, they started, falling. And we saw is still the market was, participating, was moving higher. So what has participated right now? It is more the value stocks. For example, the telecom stocks which were not participating for long, the capital goods stocks actually which were also not participating. In fact, for the last 10 to 12 years of cycle, if you see, we have not seen that kind of move coming back in capital goods. But now I think it's a very strong tailwind now, which is happening and which is going to happen now because government also is going to put a lot of money in the expenditure. That is coming back. And then your corporate linked banks, I think you need to put them in the value category right now because vis-a-vis the other stocks in the market or sectors, still there is room. Bank Nifty has not broken out above 38,000 yet. I think there is a room. So likewise, the market has a lot of buckets, which have not participated. And this is the reason this market is very interesting from here onwards. Even if the mid caps have come down, because the earnings yield of mid caps was around 3.8%. It had come down from 5% actually. So it had to happen that at certain point of time, you could have seen the profit booking, which is happening now. But still, you cannot leave the market because there are opportunities. And this is where in our fund, ACE Equity PMS, actually, we have mingled the growth along with the value. So when I say the high EPS growth, yes, it is part of the portfolio with around 45 to 50%. And then the other important component is the re-rating sectors, because we are coming out of the pandemic. And this is where I think in many sectors now you are seeing a structural change. So for example, look at IT. They have already crossed the buyback prices actually recently. And in IT, we saw that the order book has been very, very strong. And it is not only, it is coming from BFSI, it is coming from life sciences, it is coming from retail. If you look at the Infosys or TCS result this time, 20% growth we were seeing in all of these segments. So retail, it has also come up because Europe, which is more a service-oriented economy. Actually, we have seen the PMI of services has gone beyond 60% there. And the retail category also is booming. So these things are, coming into the IT space and they are venturing into the digital technologies where the margins are much better. You look at Internet of Things, artificial intelligence, the coming up 5G, blockchain, where Tech Mahindra has entered into actually in a deal. So these things can come up good further for these stocks. It's a matter of time. You can wait. If some profit booking comes, you can bring them into your portfolio. That is exactly what we are also doing. I think APIs or chemicals, when I talk about the China plus one, so definitely it is something which is very much part of our portfolio. And I think an important thing is that we are not saying the whole business from China has come to India. Even if 10% of that business comes to India, for example, look at API business. $3.5 billion India exports actually outside APIs, and China does it by $35 billion. So even if 10% of that business comes to India, our business will go to $7 billion, which is double. So that kind of proposition it is. If you see custom synthesis, or you look at the, the other segments like APIs, so generic APIs. So we are seeing the order inflow has been good. And the government also is providing the PLI benefits for the APIs. I think this is another push. So these, sectors, they combine around 75%
Amit,
of
let's break down these points which you are saying into smaller pieces and then we'll talk. Let's talk about areas of the market which have not done well. Capital good, the largest capital good engineering company, which also happens to be in your portfolio, is one which, as per analysts, is now almost trading below replacement cost and capex cycle in the country is improving. Even the largest private sector bank for that matter, which had tech issues, seem to be reversing. Mean reversion is happening and they're putting technology issues to rest. What are the other areas, or let's talk about these two. What's the outlook on these two pockets? Private sector, kind of banks and large engineering companies.
See, one interesting thing is if you look at this COVID-2, when it came, it had an impact on our economy. We saw that the mobility also reduced, though it was more a regional lockdowns, but the capital goods production was at 1 year high. So I think that particular thing is still on, whether it is construction in the remote areas or rural areas, that is still on. So this is where this growth now is coming. And if you see L&T particularly, I think the things are happening better. I think one of the best balance sheet I have seen in the stock, because their working capital to sales actually has already reduced from 24.5% to 22.5%. Debt to equity is declining. And I think the best part is they are selling the non-core assets. For example, they have sold this automation business actually to Schneider. Now they are selling to Rolls and Royce in UK. The Parva power plant in Punjab actually they are selling. And then the another business which was denting them was the in Hyderabad, the metro business. So they were getting around 200 CR of loss and something. So they have already provisioned 2,000 crores they are, and I think now they are well positioned to start from here, because last 3 years the market cap of L&T remained around 1,80,000 crores. It was more the IT companies which were performing more for it, all the three ITs. But I think now it is we need to focus again, because the core engineering should start picking up from here. When you talk about banking, I think when we are coming out, two segments have been impacted more in the last 1 year. One is the retail, the other is SMEs. So it is always better now you focus on the corporate banking stocks, because these stocks, they were not participating for the last 10 years now, because their provisioning was higher from 32 to 64%. They had to do the provisioning. The retail oriented banks, they had to do only 15%. And this is where their profitability increased in the last 10 years, and their weight in Nifty also increased. So now I think the timing is little changing, because the corporate NPA cycle is very much behind us. We have seen that out of the total corporate book, 85% is already provisioned, which is, I think, very encouraging now for these banks. If you see the slippage rate also, so it was declining in financial year 21, but in the last quarter, because of the regional lockdowns, we saw the increase. The net NPA increased by around 30-40 bips. But the important point here is the collection efficiency, which moved to 98%, it declined again to 84% actually in the last quarter, but now it is improving. And this is where actually SBI and all, we have seen that they have announced 4,800 crores of recovery in the month of July out of the total NPA of 6,343 crores. So this is something, which is encouraging. And this is where I am saying, Amit, looking at the current valuations of 1.3 times financial year 23, adjusted price to book, right. SBI looks, very, very attractive at these levels, and we should start looking at these corporate linked banks.
Amit, let's talk about some of the mid-cap ideas which you are following, not in terms of stock picks. I want to understand the businesses which you are bullish on as far as the mid-cap end of the basket is concerned, and hence have a flavor in your portfolio.
Yeah, so I think the chemical space is one where we don't have the large caps. So obviously you need to focus more on the mid caps there. And I think you need to understand the valuation part also, because some of them have already moved up. So we had actually, still we have PI Industries, and SRF kind of stocks in our portfolio, because the kind of growth we have seen, particularly you see what was happening before. All the ACs, they were going to Vietnam, they were getting assembled. The refrigerant gases, they were getting assembled there. Now the government has put a ban. The government says you bring it to India, assemble it in India, and this is where the companies which are the fluorochemical providers to refrigerant gases, suddenly their market share has started increasing. And this market, if you understand, this is a tough market in terms of margins, because commodity inflation is higher. Q1 financial year 22, we have seen many companies' margins have got hit. So where to look at in this market? So I think you need to see where the market share is increasing. This is the focus in our fund actually we have in ACE Equity, where we are focusing on the market share increasing stocks, whether it is a large cap or it is a mid cap. This is something in the coming 2 to 3 years, you will earn money. So SRF also, we have seen how the market share is increasing now. PI Industries is another one. Previously, they were more into agrochemicals. Now they are venturing into pharma, also into this custom synthesis, which is where their clients are very sticky. All the top clients are there with them. They have seen all the cycles. Still, they have remained with them. I think this is the best part of this particular company.
Right. Amit, thanks so much for your time. Great chatting. We will connect offline to scratch some of the points which you make. A very interesting point, especially on this fluorochemical business as well. Take a short break. More news and analysis on the other side.